always late, so people get tired. We don't get the exciting audience in the morning. So we're gonna make it very exciting. Hopefully, our panelists and we'll provide some insights into what we believe could be. I wouldn't say nobody has the formula. I wish we all had the formula, right? Right. We could be implementing it ourselves. But I think what we can at least try and do is explore a little deeper what the circumstances can be, and especially applicable to Latin America and many emerging markets. I wouldn't limit it only to Latin America. But before we get into it, let's just know a little bit more about our other panelists, Miguel Angel and Francisco. I'll start with Miguel. Please give us a little brief intro and how you are involved in, in fintech in general and background of yourself.
Thank you, Alex. Hello, everybody. As Alex said, I am Miguel Angel Sandoval, and I work at a company called Biz Latin Hub. What we do is financial and legal services in all Latin America for all the companies that want to incorporate or invest in this area. So what we do is help them to make business available. We give them all the services needed, and well, that's what I provide for our customers. Of course, we also help them in financial, investments, and of course, trading.
Excellent. And Francisco, please, a little bit of yourself.
Thank you very much. Yes, I'm a lawyer as a profession. I've been advising companies in many industries and segments. Some of them have been very successful, so we have been near companies that have achieved great goals, and that has given us some insights of what they need to, to achieve their goals. So I myself have been investor in some ventures. Some of them have been successful, others not necessarily, but that's basically what we do.
Great, and that's a good start because I always feel that for anybody in the, let's say that there's two sides of the coin. You have the investor coin that is looking at almost like a casino, right? You're betting, you're laying down your bets. Hopefully, one of them, maybe even more, will come out triumphant, and in the end, what you're trying to do is bet on the right horse. And on the other side, if you're the horse, you want to become the horse that becomes the unicorn. So let's explore a little bit of, let's start a little bit of the environment, because I know it's changed. We had a post-COVID boom of investment, and then we had the dark winter of investment VCs. It's starting to kind of come back, but the way it's coming back is much more careful. I think there was a lot of, let's just say, impulsive investment post-COVID. And maybe even, Francisco, you start a little bit of how you see the transformation of the VC environment, and not just VC, but investor environment in general. What was it a little bit before, and what is that atmosphere now?
Yes, well, I think that has changed dramatically in the last few years. The economic cycle that we are living right now is very different to what it used to be in the last decade. Easy money, so to speak, was easy to access to capital, raising capital for all kinds of ventures. So investors, VCs, were more readily available to fund all kinds of projects, startups, and entrepreneurs. That, of course, has changed since COVID, and in this economic cycle that we're living with high inflation, high interest rates, well, that changes all the scenario. It brings other risks to the table, higher capital costs, of course, which makes more difficult for ventures to fund themselves, to find capital, which is a big challenge. Also, it constrains the expenditure of consumers, which in turn makes it more difficult to get scale. So yes, I mean, we are in a more complex environment to favor entrepreneurship and startups, basically. And it might be changing, it might be going back, but it's going to be slow and it's going to be painful, and many startups and many ventures won't make it.
It's true, and in Latin America particularly, and Miguel, maybe you can expand how that has affected Latin America, or how did the environment, because we saw a boom in Latin America, we saw many unicorns emerge. Many of those current valuations are no longer unicorns, but we still see, I think, a very unique situation in Latin America, especially in the financial services and the technology. I think there's still so much opportunity that no matter how much difficulties there is in terms of the monetary and the interest, I think the opportunity is there. Tell us a little bit of Latin American atmosphere for that type of still fruitful investment.
Of course, and you mentioned something very important, is that the opportunity exists. It may not be the same for all the countries in Latin America. It depends a lot of the economical and political environment, but when COVID started, everything changed and everything went to technology. AI, for example, it plays a very important part, e-trading, e-commerce. So everything changed, and that opened a lot of doors. It closed a lot of barriers that existed in the moment, because we didn't have to do things traditionally anymore. We could do it online. We could do it very easily, very faster, and inclusively cheaper. Of course, this brings a lot of risks. Has brought a lot of risk and losses to many parties, but specifically in Latin America, although there are a lot of differences in monetary aspects, political or legal aspects, I think that post-COVID, technology has helped a lot to open those opportunities and help investors to find a lot of startups, make a lot of startups. For example, digitally, you can invest in other companies or in other parties without having to do it traditionally. You can do it online, P2P investments, for example, P2P payments. So in Latin America, there is a lot of opportunity, I believe. It may start to transition to what we had traditionally before, but I think that this that started with COVID specifically will continue. And as long as the technology and the innovation and disruptancy of these startups continue to work, we will see more unicorn companies. We've seen them in Latin America. We've seen them here in Mexico. They will continue. You also mentioned something that we might talk about also, about valuations. Many of them are not billion-dollar companies anymore. But of course, the opportunities are here. They will continue to grow, and we have to use the technology.
I completely agree. And that's another really good point. In Latin America particularly, we've seen the divide of the banked and unbanked and even underbanked, let's just call it also, population, some countries more than others, but particularly Mexico and Francisco, maybe you can expand a little bit of the opportunities in Mexico, but particularly Mexico is one of the most unbanked or underbanked countries per capita, and that only puts an opportunity. But also, it's interesting that you have to sell the product that people need and not a product that, as innovators, we think people need. And I think that's also the challenge. With new fintechs or with even new technologies, just knowing the right combination of what the consumer in each country needs. A Mexican consumer, as much as Latin American that they are, they might not have the same needs or even the approach to a bank than somebody in Colombia or in Brazil. They may be in Brazil, they adopted faster for any other reason. So tell us a little bit of Francisco, what you see in Latin America. What is those products that people really are looking for, and how does the product, very well tailor-made, could be the right combination?
Absolutely, and that's a good point. I mean, in Mexico, fintech has been exploding. You can see how many institutions are being fintechs. I mean, are being approved at the moment, which is surprising. Basically, what they are doing is, as you mentioned, trying to adapt what people really want and really need. And it's not necessarily traditional banking services. And that's a reason why banking services were so, narrowly provided. And these new fintechs are really finding innovative solutions that are attracting new customers that didn't used to be, didn't go to traditional services. And now they are coming to electronic banking, electronic solutions, fintech solutions to go for loans, peer-to-peer loans, for example, which is a solution that it's really amazing. How can you, through this platform, technology platform, make and coordinate peer-to-peer lending? And this is something that has been very successful for the financial industry in Mexico, and that's generating more, knowledge and sophistication for the people that didn't have to, didn't used to have access to traditional financial services before. So that's very important.
And to expand a little bit of the Mexico, because we're here in Mexico, it's definitely one of let's just call Mexico and Brazil are two top economies that can drive the market and maybe eventually can be replicated. Where do you see, as an investor, from your point of view, where do you see the opportunities right now, or not today, right? But let's just say in the next few years, for a smart investment, what is that sector that you are looking for that you think has the best opportunity to maybe even become properly a unicorn in itself?
Well, I think that's a terrific question, Alex, because in order to become a unicorn company in any sector, I believe that you have to look away from what's the mainstream media, the mainstream conversation. Probably the next unicorn company in the financial services or the medical industry as well is something that we're not talking about right now. It might be, there are probably hundreds of thousands of new ideas being discussed and developed in garages or rooms, and we're really not talking about them, and we don't really know about them. So in order to try to reach a unicorn, you might have to diverge your site to away from the mainstream attention. So it would be very different to tell you what's going to drive the next unicorn company in the fintech industry. But again, I would say that platforms allowing again peer-to-peer communication, loans, those are gonna be a mass, are gonna give mass access to a lot of people to financial services. So that's something that we'll be looking at.
Absolutely. Mass adoption is definitely one of those keys.
And scalability.
Yeah, yeah. And Miguel, you advise several companies. So what is the advice that your point of view, I mean, we're now, halfway through 2024. You have several companies, several countries, from fintechs to techs to insurtechs to all the techs. What are you really kind of guiding them? What is a sound advice? No matter if you are in one sector or another, what is a sound advice for any of these startups or any of these, kind of evolving companies?
Of course, and I'm going to try to answer this related with a unicorn. What would a company need to become a unicorn? I think there's a lot of factors that need to have to be taken in consideration. For example, you need to be disruptive. I'm going to give some examples of companies that have become unicorn by being disruptive. Is, for example, Airbnb, disruptive the whole hotel commerce at the moment. Or, for example, Uber, who showed something very different from the taxi commerce or the taxi way of the way we knew it. So if you are disruptive, if you are innovative, and you use technology the way you should be, those are factors that can help you for your startup to work and maybe become a unicorn. Now, as an advice, as you asked me, we always recommend a few factors, that is legal compliance and tax compliance always, because that could be a really bad headache and can destroy any company. you need strong management. And why do I say strong management? Because some decisions can define a company. If this company can go ahead or maybe destroy a company, for example, partnerships. Sometimes a startup to become a unicorn needs specific partnerships so that they can receive capital. And those are decisions that have to be taken by very strong management because they will define your company. Now, what kind of funding do your company need? You can go to the traditional VC and have roundups, or you can go to the new commerce, digital funding, for example, crowdfunding, where you don't necessarily have to let go of part of your partnership in a company. You can receive money. Those are the types of decisions that strong management has to take. Also with disrupting a commerce or disrupting businesses, being innovative, and of course using technology. You have AI, artificial intelligence, that I don't know if it's still correct to say artificial because it exists, but of course that's another topic for another day. But if you have all those elements and you are in full compliance with legal and tax in your country where you're doing businesses, that's a good way to start to become a unicorn.
Yeah, I mean, and you're right. It's like the combination of so many ingredients that need to fall together, and
that we don't know. If we knew them,
of course,
we wouldn't be here.
exactly.
Yeah.
Now, but it also has to, it starts with a good product. It starts with a, like you said, a scalable product that has mass audience. Because again, if you really are aiming to be a unicorn, then you really have to hit critical mass. It cannot just be a very niche sector. But in general, what would you consider the fundamentals of a founder? Because if you look at all the unicorns, I would say most unicorns, there is a founder or founders that we can even put a name to it. From the Mark Zuckerberg to the Sergey Brin and Bill Gates, and from then on, and even David Velez. So, it's not. I mean, yeah, sometimes it's a team, but we've seen that the founder has that responsibility.
That special ingredient.
A special ingredient. Yeah. And what do you guys think that is? I mean, I'm not saying the ingredient, but what do you see? What do you look for in founders?
Look. It's very difficult to give a special ingredient or a formula for this to work, but you mentioned some very important examples. For example, Bill Gates, Mark Zuckerberg, Elon Musk, and these are people that I believe know what they're talking about, okay? They didn't start a company that was totally different from their knowledge, okay? They didn't start a fashion company. They did something they knew. I'm sure they had strong management, partnership, and that's the way you get a startup to work and maybe become a unicorn. So, of course, if you want to start a business, I'm not saying that you can't start any type of business. You can. But I would recommend you to do something you have passion, you have knowledge. For example, I wouldn't start a fashion company. I don't know nothing about fashion. I would start something I know. And then I would try to find partnership and people that know about that business. Try to involve technology, because we have to admit that technology today is a very important piece of any type of business. And if you use it correctly, you can expand your market anywhere. Okay? And that's part also of the ingredients of a unicorn. You have to get a very large size of market. There's a lot of companies that are unicorn. Most of them are B2C commerce, directly business to consumers or final consumers. Of course, you have B2B, that's business to business. But most of the unicorns are B2C. So what do they need? They need a very large scale of market. How do you obtain that? Funding and technology. I think you do that. And for funding, you have to use it intelligently.
And Francisco, what do you think is that founder's perfect combination?
Well, it's hard to say. Again, it's not a recipe, but definitely you need a leader, a visionary, someone who's thinking of things that had not yet been thought of. Take, for example, Elon Musk, and his SpaceX would revolutionize the space exploration, which was a field that was, only for government agencies. He came and revolutionized everything. No, he made it possible to reduce, you know, some materials used by agencies, government agencies, to make it feasible for private companies to explore the space. So probably when he first said the word, I'm gonna found a space company, everybody look at him and you know, you're crazy, man. So one of them is if they need to be visionary, probably a little bit crazy. They need to be stubborn, because they're gonna you know, encounter many people who's gonna say, no, you're crazy, it's impossible. And even though they're just gonna keep going. And I think those are two main characteristics: vision, leadership, and stubbornness.
And then, yes, I would put one more ingredient in its execution, you know, because the vision of an amazing founder, doesn't matter how intelligent, capable, well-surrounded, if it's not executed, then you're not really doing anything. And I think I would emphasize that the startups that survive and eventually have a chance to become a unicorn is because they execute, and execution is everything. And in many of our startups or in our industry, you don't have too many chances. You know, you have a chance, and maybe one client gives you that chance, and if you do not execute, you miss that chance. But if you do execute, that big client can become the step for the next one, and that really is what is, at the end, is how well you can execute that. And of course, that's a whole team, technology, so it's not just execution, it's so many components, right? One last thing that I wanted to kind of really explore with you guys is, with this current environment and much more difficult to raise money and access to capital, and just in general raising money and the challenges, do you see now a difference when an entrepreneur is entering this environment to start up? You have the building of a foundation versus the building of a dream, and I kind of wanted to see what you guys thought, because you do have to have a vision, and it needs to be out there, but if it's not applicable, and if it doesn't have the right foundations, it might not really survive. And for hundreds of years, companies were built over time with right foundations and growth that was sustainable. And now with venture capital, the growth is accelerated, and sometimes the foundations are not there. So maybe, Miguel, you can see a little bit of what that complexity can be.
Of course, if there's no foundations, or they're not the right foundations, it's not a unicorn. You're chasing a dream. So yes, right now, with the new conditions in the market, it's not very easy, but it's easier to obtain money, to obtain funding, to make partnerships. And that helps for the companies to grow at a faster pace, but it also helps to destroy a company if you don't have the right foundations, as you said. And many people don't evaluate exactly what the company needs. If you need profitability at the moment, or what you need is growth, because maybe you don't need both at the moment. What you need is growth. And sometimes for growth, you need capital so that you can expand your market. And once you are expanded, you can start thinking about profitability. And yes, for expanding, you need money. Usually you need money. And now with the new conditions in the market, with technology and all these options you have, crowdfunding, for example, you can obtain the funds. And if you have the right foundations for your company, you can continue to expand. And if you have strong founders or direction in your company, and you make the right decisions, then you are in pace for your startup to maybe become a unicorn in the future. But as you said, if you don't have those foundations right, what you are obtaining is debt, wrong partnerships, and maybe not growing, expanding as you need to start to thinking in profitability. That's what I would believe.
And one thing that you always hear, and it's important, that maybe the vision begins with a clear plan, but it's important for startups to know when to pivot, because the pivoting is not changing your plan, It might be, in the America's Cup, the sailboat, when they're doing their strategy, the end of the race is the same. It's how you get there. So as long as the vision still is the same and you have to pivot around to get to it, it could be a way. And that's always, you always see a lot of startups that disappeared, and the founders come up and it's like, I should have pivoted into this and I should have done that. And it's not easy, right, to see those moments to pivot. And I don't know, Francisco, from your experience in those founders or in general, those changing a business or a strategy in the middle of your vision is not that easy.
No, absolutely, and it goes all the way to even the founders need to know when to pivot, including when to just step aside, because there are times in the business, in the development of a company, of a great company, not to say a unicorn company, where the main obstacle becomes the founder. No? The founder is really needed at a certain time of the development of the business, but there might be other times where what you need is, for example, someone who diminishes the risk of execution, which is very important. Not all founders, not all visionary leaders have the same discipline required to execute the next step of the business, the scalability, the execution, etc. So definitely, there are times where the company needs to pivot in many ways, from when to make that partnership, when to say yes to that franchise, and when to just step aside and take another role in the development of the business. And it's not an easy decision.
Yeah, absolutely. And also that's part of the, if you have the right investors, sometimes it's important that you don't just get money, you get, guidance, you get a proper, sometimes VCs tend to do that, but also tend to show you in the wrong direction. So it's a tricky part. But yeah, going after money and having the money is important, but having the right money is even more important. We have about 2 minutes, but I wanted to see if anybody has any questions for our panelists, and I wanted to ask any specific.
Hi, my name is Miguel Angel. The question is, you as a startup, how do you get the right balance between, for example, if you want to be the next unicorn, looking for innovation, be disrupting, but at the same time, you know that you have to do something that the market is looking for?
I can give you my opinion. It really is. It's not easy to measure the thermometer of the environment, but you do have to have it, and that could be one of those secret formulas that a founder has to have. You have to have a pulse into the system and to identify changes in trends, in behavior, because like Francisco said, if you're just adding a product that is already there, you might do okay, but if it's not really doing anything different than the competition, you might not excel. So it's really understanding the behavior of your customer, so really understand your customer and your product. Can your product give that customer what he's really looking for? So I think it's a combination of things. It's a combination of your own insight, your own vision, but also to really have a pulse into what is it that the market is looking for.
There is an ingredient I've seen in most of the unicorns, and is that they are very disruptive companies. They offer product or services totally different of what we were used to. For example, hotels, Airbnb, taxis, Uber. And in Mexico and all Latin America, well, in the world, but in Mexico, there is a lot of opportunity. Mexico is one of the highest underbanking countries, for example. So if you want to have a bank and you do a traditional bank, well, you know what you're going to get. But if you offer banking services different from the traditional services you have, maybe you can get to that underbanking market here in Mexico. You can do something disruptive innovative. For example, you have New Bank, you have Chime in USA. They are banking in totally different ways from what we were used to. So I think that's one of the ingredients you have to take into consideration, not only for unicorn companies, but any startup. That could help.
Anybody else?
Hi. In your opinion, what would be a good holding time period to see if a unicorn develops? I don't know if it's years, how many years to see if effectively it is becoming a unicorn, or what metrics do you use? And exit strategy, or do you have a long holding period, or what are your thoughts on those metrics?
I mean, a unicorn can be what one investor is willing to pay for a company and what a newspaper is going to say. And there's many examples of how a company raised X amount of money at X valuation and suddenly they are a unicorn. That's a very, let's just say, not grounded valuation. I think the real unicorn is when you either have an IPO or when you have a merger, sizable merger, or you get acquired, or you have a significant capital raise that now you have 50, $100 million were invested in this company by various serious investor groups that legitimize now the valuation. Because if you have a raise and only, I don't know, 10 investors that nobody heard of, and you gave them a valuation of $1 billion, it's not very serious. So I think there's different metrics that can be, but the ultimate measure is always the public market. The IPO is the ultimate measure of, you know, what anybody, because it's available to anybody, is willing to pay for a company. What do you got? Maybe.
Oh, well, thank you. Well, yes, it typically has taken a few years for companies to become unicorns. Probably 5 to 10 years, and typically they for those several years, these unicorns are privately held, so they are only accessed by a small number of VCs or shareholders who are there until, you know, there's an IPO or there is another exit possibility like a merger or something, but. That's, you know, investing in a privately held company is extremely risky because for many reasons. One of them is liquidity reasons. I mean, it's not like you can just say, yes, take my shares, I'll sell you my shares. So you need to be willing to risk everything for a long period of time and, you know, face that liquidity risk that involves, but the rewards are there. And if you hit it, you hit it. So, but yes, I mean, it takes a few years.
Hello, thank you. On my experience being in early stage startups like Mercado Libre, Clip, and some others, being a marketer, and even the last one that is Arrenda, talking with founders and CEOs, what they think, I have a question for you in terms of what do you think in terms of mindset regarding that if the founder of the CEO, these persons that have the first idea and this disruptive idea, this innovating idea, in terms of it should be or a must for the CEO or the founder thinking on be a unicorn, or is not important to have this mindset in mind regarding what to achieve and how they watch them in the futures. Having this as a goal is more important, market, MVP, and the product and what they are doing, thinking in the dream, or it's very important to have this mindset to say, I would like to be like Rappi or those others like Clip.
I mean, I can say that everybody would probably want to dream of a unicorn. I think is you know, everybody's dream is to get there. I think for a proper startup and a proper entrepreneur and a proper founder and CEO, you have to focus on small goals, achievable goals, with a longer plan and try to achieve these plans. That is, let's just say that the plan should push you in an upward direction of growth or of profitability, whichever the path is. But you cannot simply start a company and focus on how to become a unicorn. That's like starting to act tomorrow, and I'm going to get an Academy Award. I want to win an Oscar. Let's do a small goals that can get you eventually there. So I would think that most serious founders are so focused on that product and on changing something or changing the environment or disrupting something, but not to achieve a unicorn. They're achieving something that they believe is needed in the market. And eventually, the result can be a unicorn. So I would think that that is the focus. Not sure what you guys have seen.
I concur totally with you. If you start you start a company thinking that you have to be a unicorn, then you're making a mistake, because you start taking decisions thinking of a unicorn. And then you start asking yourself, well, how much time do I have to take to be a unicorn? How much money do I need? So where am I going to get that money? Bank, interests? I think it's a mistake to think that you have to start a company thinking of a unicorn. What you have to do is analyze your disruptive or innovative idea and analyze the market where you're going to offer it. If it's in a country, analyze realistically what is your market. And once you have the opportunity to expand that market, that it's what we also talked about, growth versus profitability, then you can expand. And if you take those right decisions, your startup could become a unicorn. But I think it's a mistake to start that way. You have to start a company thinking of what the reality of where you're going to begin is, not what you want to achieve, because what you want to achieve may take you to the wrong decisions.
No, I concur. There's been a few examples where founders are so focused on just making it grow and hit the unicorn, and then everything crashes. I think everything starts with a passion, but not a passion for money, not a passion for a valuation, but a passion for a solution, a driver for a new product, a new service, something that didn't exist, and it covers a new need or a need that wasn't satisfied at the moment, and it becomes a passion and an obsession for the founders. But a few of those examples where the founders are just focused on valuation, just meet a bad end. So I would concur that it begins with a passion, a product, a service, and then probably at some point the founder says, well, you know what, my passion can become a unicorn. But that's something that they didn't see at the beginning.
Now, it's important to take into consideration valuations. We all know that. I don't want to say that it's overrated or underrated, but valuations is depending a lot of who is giving the valuation. You can do an analyze company to company. If you have VC, they're going to give you two valuations. A low one if they're going to invest. But if they want to come out, they're going to give you a high valuation. So sometimes valuation is not exactly correct or exactly what a company is. Some unicorns, or what we believed were unicorns today, are not unicorns because the valuation can change. So yes, I concur. Start your company with passion, with an idea, an intelligent idea, strong management, and the money will come.
No, and have a focus. I think focus is definitely the way to go. And once, it's like a marathon, once you get to the mile 1, then let's deal with mile 2. You cannot start a marathon mile 1 thinking of how you're going to be handling mile 23. Let's focus on achieving these achievable goals. And one thing for me, myself, I have a sign on my desk that says the hard truth. And it forces me that every day I might have a client, I'm so happy, everything is, but it forces me to look at the hard truth, which internally I have to say, okay, what is not working? I cannot focus on, oh my God, great, I got this client is super happy, I love this guy, I met this guy, is a potential okay, let's focus also on the hard truth, which a lot of people don't want to face, which is the worst part, where your faults are, what is not working, what could be better. And focus on that because those are the foundations. And again, the other advice I would say that anybody or any founder should focus on is what potentially can make you money. If your time as a founder or as a leader is very valuable, you cannot be focusing your time on something that could be only generating 5% and it's consuming 50% of your time. You have to focus your time on what could potentially bring 50% of your revenue. And that is also difficult. Allocation of your personal time to meetings, to clients. So there's a lot of things that you can do, to kind of drive in that direction. Thank you so much, everybody. Thank you, guys,
Thank you.
for the great panel.
Thank you, Alex,
Alex.
Francisco.
Thank you, Miguel.